Bitcoin down. Tether evaporates $14 billion worth of stablecoin. Good morning, good evening, good afternoon, wherever you are, whenever you are. Thank you for watching this video. My name is Da Vinci. Jeremy, I'm in the pipe 5 by 5. Man, you know what? Honestly, I'm a little bit tired today because I've been losing sleep over OpenClaw. I've been using that for quite some time, or just studying how to use it and actually trying it out and doing all kinds of crazy things. You should do too if you have the time and are skilled at computers, because it's a little bit tricky, but it is definitely worth it if you have the skills. Anyways, with that said, we're going to be talking about Bitcoin today. I'm going to be focused on Bitcoin today. I'm going to do the Bitcoin charts. So if you're interested in trading, make sure you head over to buybit.davincij15.com. Why? Because next week they're going to be doing a promotion for just my subscribers alone to get free money. Yes, free money so you can trade. Even if you already signed up, even if you're a previous customer of mine, if you sign up, if you use my link and sign up, you'll be getting free money to actually trade, right? So make sure you stay tuned till next week. You hit the subscribe, you hit the like button to be a part of that free giveaway. Okay, that said, moving on to what's going on with the markets. Well, there's so many different people coming out every day saying why Bitcoin has gone down. And yes, there's some truth to all these different speculations and so forth. From my personal point of view, I think that it's just the high leverage, basically, and the synthetic Bitcoin everybody's using. That's all it is. That's my personal opinion. All right. So with that said, I'm going to go over some news links and so forth, talk about other people's personal opinions. All right. So we're going to start off with this article, Getting Rich with Bitcoin. That's step 1. Keeping it and making it work for you. That's the game. I have the cheat code. Come and get it at b4b.dj15.com. If you guys go to the description, the link in the description below, as you can see, there's all kinds of links here. And you can see this is the link here for the VanEck article and the $14 billion stablecoin drain, which we're also going to talk about. Let's talk about this first article here. Bitcoin, 3 numbers behind the 70K crash and why it blindsided everyone. No, you know what? Honestly, not everyone, because a lot of people were seeing the bear market. I was seeing the bear market. I knew it was going to collapse Bitcoin because we're in a bear market, period. And when we're talking about it back in December and the Daily Hodl Show, everybody was like, yeah, opium. Yeah, we're in a bear market now, dude. We're in a bear market. We're going down. Going down. I knew we were going down. I thought we were going to go a little bit higher to the 100K and then collapse, but we only went to 96 and then collapsed. So there it is. And we've got more collapsing coming, right? Probably not even going to fill the gap of the 84,000. If we fill the gap, it's probably going to be when we hit the bottom. But anyways, we'll talk about that in a second. The crash wasn't caused by manipulation or panic. It revealed something more troubling. Okay, let's see what else is troubling. Bitcoin had already become the very thing it promised to destroy. Yeah, it didn't become that. It was taken over by the people who knew it was coming to destroy it. Okay, so keep that in mind. All right, when Bitcoin fell below 70K in early February 2026, the usual suspects appeared in headlines. AI stocks crashing, government shutdown fears, Federal Reserve policy, uncertainty. However, the real story was hiding in 3 simple numbers that most investors never see. The Coinbase premium, stablecoin market cap, and basis trade yields. Together, they tell a story that should concern anyone who owns Bitcoin or believes in what it once represented. Okay, what? What? Hold on. So basically, it's saying that Bitcoin's broken because of those 3 points: the premium, right? Stablecoin market cap and basis trade yields. What? It's not broken, okay? It's manipulation, right? That's what it is. But this guy's saying it wasn't manipulation. Here's why. It's manipulation. If I know this, you're going to destroy me, I'm going to build systems so that people will help me keep it down, right? I mean, I know I can't destroy it, right? Because mathematics prevents you from actually destroying it, because what's going to happen is there's a fixed supply, and people like myself, Michael Saylor, and a few others are just going to continue buy until there's not enough reserves in those exchanges to make the price drop down. Okay? That's exactly what's going to happen over time. Right? And so that's what we're doing. Right? That's what I'm doing. And that's what you should be doing. Because then, as that happens, right, once the truth reveals, right, it's going to look like what silver's done and what's going to do over the next little while, right? It's going to go absolutely bananas, okay? Because wait a second here, there's no. I have Bitcoin, but I have dollars, right? No, you don't. You don't have Bitcoin. You only have dollars, actually. Sorry to burst your bubble. If you have Bitcoin held by a bank, it's just dollars. If you have Bitcoin held in an ETF, it's just dollars. Somebody else owns it, and it ain't you. Right? And it's like synthetic Bitcoin, most likely, that you have. That's just the way it is. Okay. And that's the real mathematics. It's proving the manipulation. All right, going on. And the math revealed that Bitcoin's long celebrated institutional adoption had quietly killed the revolution. No, it didn't kill it. Bitcoin is still alive. What's going to happen is, just like you were saying, everyone was blindsided by this crash, right? You're going to be blindsided by Bitcoin's absolute pump one day in the future. It's going to be absolutely epic. Epic. And it could happen sooner than later, right? Because of gold and silver is just constantly going. That shows there's a no confidence vote in the US dollar. Right? That's what's going on. All right. The 3 numbers that tell the story. For the 21 straight days leading into the crash, Bitcoin traded cheaper on Coinbase than on offshore exchanges like Binance. The gap, called the Coinbase premium, hit negative at the worst point. That the most negative read in a year. Okay, so hold on. Just so you know, right? Silver is trading higher in China. It's trading higher here in Dubai. Okay? So, if the US is discounting their Bitcoin or silver, and the arbitration can't close the gap, it means not something wrong with everyone else. It's with the government, the US Bitcoin, because they're trying to scam. That's what it is. It's the scam on that side. And you might say it's institutions that are selling Bitcoin, right? And this is what this guy says. Why does it matter if Coinbase is where American institutions trade Bitcoin? Binance is where global retail traders operate. When Bitcoin consistently costs less in America than everywhere else, it means one simple thing: U.S. institutions are selling while the rest of the world tries to catch the falling knife. Investing.com. Okay. Mainstream, probably, right? That's a lie. Because whilst liquidations are happening, they created those liquidations so that they can be a buyer. The only way that a price can be set is somebody has to be the buyer. Right? So someone is buying whilst another person is selling. Else there isn't a price. That's how it works. And so effectively, who's got the big hands to buy? Obviously, institutional players. And who is willing to sell when prices are going down? Obviously, it's retail. Okay, the premium says negative state. Okay, the premium stayed negative through the entire crash. No bounce, no institutional buyers stepping in to buy the dip, which that's why, prices didn't go from 60,000 to 10,000 because, poor people with no money decided to buy and push the price higher. And since no one is buying the dip, right? Then it went to zero, right? Because since you need a buyer in order to create the price, then if nobody bought the dip, then it should have been zero. So dumb. So dumb. Okay. No. Like they're supposed to during a stress. I mean, come on. Just persistent, aggressive selling from every players from so it was just persistent and aggressive selling from the very players who had spent years telling everyone that Bitcoin was the future of finance. So I was selling. Michael Saylor was selling, right? No, see the nonsense in this, man. Oh my God, they're saying all the core Bitcoin holders were the ones selling. Ouch. This is painful to read. Painful. But let's move on to the next BS. At the same time, something bigger was happening in the market plumbing. Stablecoins like Tether and USD coin lost 14 billion from December through February. In 1 week alone, 7 billion disappeared. Okay, so let me continue before my commentary. This means that when investors sell Bitcoin but keep money in stablecoins, they're just moving between crypto assets. When they redeem stablecoins for actual dollars, they're leaving the ecosystem entirely. They're not repositioning. They're exiting. Okay, yes, they are exiting, right? But do you know crypto is made up of more than just Bitcoin? Just saying. And since we're clearly in a bear market, I'm sure there's lots of, altcoin sellers out there just throwing in a towel because Ethereum went to some crazy lows of 1,800, and same with Solana made it all the way to 66K, which was my target. The third number explains why they left. Hedge funds had loved Bitcoin for a specific reason. The basis trade. Buy spot Bitcoin through ETFs, short Bitcoin futures, and pocket the difference between the two. At its peak of 2024, this trade delivered 17% returns annually with minimal risk. Jesus. Jesus. I'd have to look into that. I'm not sure if that was the case, but possibly, Jesus, right? Because then, you know, you have offsetting positions and so forth, but I'm not sure how you would profit from that. Interesting, because maybe you would, because of the what's it called? The gaps that happen over the weekend. That's why the gaps close. Yeah, that would make sense, actually. Wow, I like that. Yeah, that would make sense. That now it does, that number adds up. And so basically, yeah, that trade would make sense actually. Now that I think about it. Okay, I'm gonna go on to what's it called, the charts, but just quickly, VanEck, right, is they're saying that deleveraging without capitulation occurred, right? I'm sorry, but what was that wick at a $10,000 move in one day called? Is that not capitulation and reversal? Right, Jesus. Statistical stress, not structural failure. Yeah. It's just, you know, the people like are getting like liquidated and then it's falling, right? But they're saying, right, multiple indicators reflected elevated stress levels. I wouldn't say that, but yes, the indicators were saying, okay, well, things were rolling over. That's all. Mean reversion bias bias emerging. Okay, first off, Bitcoin is only reverting because of the high speculation with leveraged money, and that's all it is, right? And it always will, even though you're saying we'll do that because of the paper money, and on top of that, Bitcoin's fixed supply. So because the paper money can rush in and bid up prices and then rush back out, this is why we're seeing the collapse of Bitcoin so much. Okay, let's move on to the charts. And if you're interested in trading, make sure you head over to x.dj15.com. That's x.dj15.com. Link is in the description below. Okay, looking at the price, as I said, this looked like it was rolling over. I said to be careful about that, but now you can see it's clearly broken. It's level here, which was the $68,800 level, and now we can see that it's breaking down even further. If you want to take this wick even further, take this line even further, you can see that it will hit the 61.8. So that's a target for Bitcoin. So if you're interested in trading this, the best thing to do is to short this. And let's see here, short right here, right at 38.2. We're probably going to come back to that. You can probably move this stop loss right up here. They might come for it. Just keep that in mind. Oops. And then take us to the 61.8. Yes, I think there's a 2-to-1 risk to reward ratio. Okay, that's 14 ratio. That's not good. 14% ratio. That's not good. Oh, because I'm not all the way at the 61.8. There we go. And so we need to shorten this up. So there we go. Let's start it up right about here so we can get in. It's just at the breakdown. And yeah, so that would be the entry, stop loss, 2-to-1. Perfect. Okay, so that would be the trade. Let's take a look at the, yeah, we still have that big gap, and it looks like that gap might fail, might not be filled, sorry, because, well, we have a lot of pressure coming down. So this long after we bounce is over. You have to walk away. I figured we were going to fill the gap in a big fast move up, but we did not do that, and we might bounce around the 63-ish 63K, 63.5K amount, and then off we go. Maybe try to take out the 84K and close the gap, but don't count on it. If we don't break above the 72K, it's lights out for a long time. Lights out for a long time. It's lights out for a long time, even if we get up here at the 84K. It doesn't matter. It's still a bear market situation. It is what it is. All right, guys. Well, I'm sorry to bring bad news for you guys. I know you want bullish markets only. It's a lot more fun when it's bullish. But you know what? We get to collect Bitcoin on the cheap and load up. And you want to get as much Bitcoin as you possibly can whilst they, give us discount prices, because eventually the reality will come. Because we live in a society where everybody trusts the current system. They trust their broker. There's a lot of trust. They trust the bonds. They trust everything. And all those trust systems are not verifiable. They're guaranteed to be broken, those trusts. And once they do, people will realize that maybe we should have a verifiable system. What a concept. Yeah, maybe we should put our money where we can verify that it won't get stolen. That's what crypto is. I hope to see you on the other side. Cheers.